Okay, I need to check into the mining production, the updated mining production, the what's coming in 2016. So we got an article here from Money Metals Exchange. Peak Silver, it's called, and continued supply deficits warn of future higher prices. If the market has finally experienced a peak in the world silver production, this warns of higher prices in the future. In addition, the global silver market suffered another large net supply deficit for 2016. These factors point to a big upcoming trend change in the future of the silver market. The Silver Institute just published its 2016 Silver Interim Report. This report is published by Thomson Reuters. According to their forecast for 2016, global silver production will decline to 887 million ounces, down from 893 million ounces in 2015. I'm just going to say to you guys, I knew it. I could smell it. I could smell it. I knew it would be down, and I'm going to tell you what, it's going to be even down bigger next year. Bigger next year. This is just the start of the decline. This last year it went from 893 to 887. I'm going to make a prediction it's going to drop down to 850 or lower next year. And when they get the figures in for next year, it's going to be 850 or lower. It's not going to be up. It's going to be down significantly next year, and that's going to be a big factor. Okay, so while forecasts of global silver production for 2016 is down only slightly versus last year, GFMS also stated this in the report. We estimate that mine supply peaked in 2015 and will trend lower in the foreseeable future. Declining total supply is expected to be a key driver of annual deficits in the silver market going forward. I will get the annual silver deficits in a minute, but look at the world's silver mine supply by region. What is interesting here is that the GFMS forecasts the number one silver producer, Mexico, to be down in 2016 by more than 6 million ounces. Last year, I forecast that global silver production would likely be lower in 2015. I was going by data by the World Metal Statistics. However, Mexico, government agency, considerably revised their figures higher for 2015. While I have seen revisions take place, the revisions by Mexico for 2015 were quite substantial. Regardless, GFMS does a pretty good job with the silver mine supply data. The important takeaway here is that the trend of global silver production will likely be lower going forward. The majority of global silver production declines will come from byproduct base mining. The majority of silver production comes from the byproduct of base metal mining, according to GFMS 2016 Silver Interim Report. Lead and zinc accounted for 34.4% of silver supply, while copper yielded 22.1%. Thus, the mining of these three base metals supplied 56.5% of global silver production in 2016. Primary silver production accounted for 30.4%, and gold mining supplied 12.5%. As I have mentioned in prior articles, the decline in global oil production will impact base metal mining to a large degree than primary silver production. It takes a great deal of liquid fuels to produce the world's base metals. For example, the Chilean Copper Commission stated that in a 2014 report that the country consumed 535 million gallons of fuel to produce 5.7 million tons of copper. Thus, Chile's copper industry consumed 94 gallons of fuel for each ton of copper produced. On the other hand, Pan American Silver burned 20.5 million gallons of liquid fuel to produce their 26.5 million ounces of silver in 2015, which means each ounce of silver produced took 0.80 gallons of fuel. If we use Pan American Silver as a guide, then the 269 million ounces of primary silver production in 2016 produced 215 million gallons of liquid fuel. However, I would imagine that the global primary silver production average is much less, more like 0.50 gallons per ounce of silver. So what they're saying basically is it's a half a gallon of fuel it takes to get out each ounce of silver. So if you've got a 20-ounce tube of say Silver Eagles, that took 10 gallons of gas to get that out of the ground. So we are talking about 135 to 150 million gallons of liquid fuel to produce all of the primary silver in the world. Now, the world productions in total of 18.4 million tons of copper in 2014, taking Chilean average of 94 gallons per ton of copper produced, and providing a conservative estimate of, say, 75 gallons per ton for an entire globe, then the world consumed roughly 1.4 billion gallons of liquid fuels to produce its copper in 2014. That's about 10 times the amount of fuel it took to produce all of the primary silver production. Of course, this is a simple estimate, but there you have it. Once the world enters into the next financial collapse, the United States and world oil production will plummet. This will impact base metal mining a great deal more than primary silver production, which means overall silver production will decline more rapidly due to more than half coming from zinc, lead, and copper. And global annual silver deficits continue for 13 consecutive years. Due to the huge increase in global silver ETF demand as well as large exchange inventory build, the silver market will suffer a forecasted 185 million ounces annual deficit in 2016. If we look at the annual silver deficit since 2004, it equals a stunning 1.5 billion ounces. So, it looks like the deficit since 2004 till now has been 1.5 billion ounce deficit in the silver. So what they've done is they've dipped into the silver that they've had stored through the ages. I heard that they actually I don't know if it's a rumor, I don't know if it's true. It very well could be true that they dipped into the silver supplies at the Vatican, and they were going down and pulling it out with a front end loader, and they had goblets and everything, old goblets and everything. They were just taking it for smelting it into bars to keep up with silver demand rather than run short. And they've been using up these inventories that they built over the ages. Going back, from what I understand, back into the 1980s, they had something like 13 billion ounces stored away in above ground inventories, and now it's down to less than 1 billion ounces. They've been consuming it, and so what we're looking at here is since 2004 until now, they've used 1.5 billion ounces of those inventories that they had put away. Now it's physical inventories. So every year they're running deficits. If we take a look at from 2004 till now, and last year was a rather large deficit. Of course, in 2008 was also a rather large deficit. The two biggest deficit years were this year and 2008. And so it says the GFMS calculates their net balance by subtracting physical demand from supply and then deducting or adding changes to the silver ETF and exchange inventories. According to their data, as of September 2016, silver exchange traded funds and exchanges added 133 million ounces of silver to their inventories. Furthermore, total physical demand exceeds total supply by 52.2 million ounces to arrive at a total of 185 million ounces, rounded to 185 million ounces net deficit. These annual deficits have been supplemented by silver surpluses of the 1980s and 1990s. However, annual deficits are forecast to continue as mining supply continues to decline, along with subdued scrap supply. Why do these supply and demand factors matter for the price of silver? For the future price of silver? Recently I have stated that new information on the thermodynamic oil collapse based on the Hills Group and Lewis Arnold's work suggests that supply and demand are not the real factor that determines price. Rather, it is the cost of production. However, gold and silver are different from most other metal commodities and energy. While silver is consumed more than gold, it still functions as money or a store of value. Thus, it should be valued differently than copper, wheat, or oil. I don't look at global mine supply or the annual silver deficits as factors that will impact the market price of silver by certain degrees. Rather, I look at them as telltale signs that the overall trend is changing, and has been for nearly a decade. It is the longer-term fundamental trend change that interests me, not the year-by-year supply and demand factors on price. Currently, the silver price based on its cost of production, 90 through 95%, plus some supply and demand factors. While many believe the big banks can push the price of silver anywhere they see fit, this is pure nonsense. If the big banks push the price of silver 25 to 50% below its average primary silver cost of production, traders would come in by the droves. While traders may be uninterested in long-term fundamentals, they aren't stupid, and as it pertains to short-term market forces. That being said, silver's ultimate value is not based on cost. It will be based on its store of value properties. And while the mother of all deflations finally arrives, I'm talking about deflation of most paper assets, stocks and bonds, and real estate, it is silver that is rare. Because there is so little real physical silver in the market, 3 through 4 billion ounces, any significant amount of capital moving into it will push its value to a seriously high level. Well, first off, he's stating 3 to 4 billion ounces, the real physical silver in the market. I don't believe it. I think that there's probably actually out there less than 1 billion ounces of actual physical silver out there. The physical silver out there, that billion ounces, you have to understand, to run the deficit of, say, between 150 and 200 million ounces a year in the silver that's being sold, the physical silver is being sold through places like Kitco and all these different places, these suppliers. They're only using about 200 billion ounces a year, more than what the mining production's coming forward with. And so, because there's probably the best chunk of 1 billion ounces out there, they do have enough to last for a little while. But it's disappearing fast. They're losing about 200 million ounces a year, and that's going backwards. They're going backwards every year. So I don't agree with his 3 to 4 billion ounces out there. I don't think there's that much out there, really. So let's read on. It says, because there is so little real physical silver out in the market, 3 to 4 billion ounces, any significant amount of capital moving into it will push its value to seriously high levels. This may seem a play on hype, especially for those who are a bit delusioned by the price smash since the Trump presidential election. Unfortunately, for those who continue bellyaching about the low silver prices, there isn't much I can say to change your opinion. I've come to realize that a significant percentage of silver investors who continue to understand the long-term fundamentals will never complain about lower prices. They just suck it up and know that insane central bank policies won't last forever. Unfortunately, the precious metal community also has its group of individuals who complain when the going gets rough. This should be expected, as this is the typical nature of a fickle public. All slaps on the back when things are good, but the first to badmouth when things turn south. I get a kick out of bellyachers who seem to forget that the central bank have embarked on the most insane monetary policy in history. Boy, he's got that right. They sure have. And it's going to end very, very badly. He goes on to say here, they have pushed debt and money supply into an exponential trend. I find it simply amazing how disgruntled silver investors point out how wrong the precious metals analysts were on the silver price back in 2012 when they totally dismissed massive central bank monetary intervention. Regardless, peak silver production on the top of a continued annual deficit points to a trend that will reach an inflection point in the near future. So here is the beef. When you think exponentially increasing debt and monetary liquidity will continue for the next 5 to 10 years, then maybe you should stay in dollars, U.S. Treasury stocks, and real estate. However, if you aren't suffering from brain damage, as many of the markets are today, then you may want to consider staying put in the 2,000-plus year monetary history and store of value of silver. And this article was written by Steve St. Angelo of SR Rocco. Well, thank you, Steve St. Angelo of SR Rocco. It was a good article, and he shows very carefully here exactly that the world silver production is in decline. Thank you very much for listening. Like and subscribe, and we'll catch you in the next article. Bye.